Yo, what's up, Rocket Scooter? Let's get ready to go. Good morning. Day 18 of the streak. Well, streak and stream. Haven't lost a day yet. Hopefully today's the day that doesn't happen. We're opening irrational, so outside DD band's gonna take it light today already. VIX continues to explode. Not a lot really to see how this is gonna be a very cut and dry, easy day. I'll probably do absolutely nothing. Maybe stream for about half an hour, show you the new features. Rocket Scooter's a brand new release today. All kind of cool stuff, so I'm excited to show it with y'all. So hang tight till we get started. All right, get started in 5 minutes here. You guys know the drill. Waking up. Rational markets, you know how that goes. What are the DD bands? It's an exploit of something in futures that we know that the market has stretched a little too far at the open. The equities market and futures market are not going to be in harmony. We're going to chop around and be volatile. I can already tell at the start of the day, we have a bot that gives you information. Rocket Scooter will display for you on the screen a specific ratio that's the perfect bull bear bias of the irrational side. I mean the illiquid side of the market. 100K challenge starting with the 10K start. I do these challenges all the time, fully transparent, account front and center, account number, balance, all that on the screen. You can see everything, broker statement. The only person on planet Earth who actually does that, so I don't know why you'd watch anyone else trade, but come on over and stay. We'll show you how this goes. It took me about 2 months to get to 100K, and you can watch every move live. Haven't lost a day yet. It's been 18 days. Can't remember how many days in the stream. Yep, 18. Today's day 18. So 17 days with no red days. I guess I'm just lucky. All right, let's talk about some new features today. Good morning. All right, Rox, there's a bunch of new features today. You see we've renamed the distance between hedge pressures, hedge spread and up. This is kind of a small thing. Wall target's now a parameter you can look for, so you can see how much distance you have, like an illiquidity pocket, to search for a wall target. Am I doing whatever's awesome? What am I doing here? Oh, well, I started a company called Rocket Scooter secretly 3 years ago. And we released a trading platform. And you're seeing it on the screen right now. That's what we've been doing. Yep. All right, markets irrational. Let's talk about it really quick. Top left. Okay, DD bands, I have them in Thinkorswim. They're not our platform yet, so I still manually do them outside the band on all three indices. On 2 of the 3 indices, so you can see that right now we are opening. We call it rational. Rational markets are random. If we duck inside the bands, I'll trade and trade small. I already know from the start of the day I can sit out. I can avoid volatile, choppy mess of a market. If I were to guess what's going to happen for the rest of this quarter, look at the daily chart. You can just see what I expect the market to do is trade its way lower and slower to here over the course of the quarter. It's all supported by the weird situation we have with increasing jolts, increasing first-time unemployment filings, and increasing continuous unemployment claims. How can you have more jobs available and more people not getting jobs and can't get hired back? It's a weird dynamic we live in, but the market does not like that. People being very picky about who they hire. Certain sectors can't fire people fast enough and others can't hire people fast enough. So there's a weird, strange situation. Bottom left on my screen here, I'm gonna show you something cool. We now have a save window layout. So I'm actually gonna do it for the very first time, but now I'm gonna show you how I arrange all 4 of my scanners. We'll do that live. We'll do like a scanner setting tutorial today, which would be kind of fun. We'll go back to my main screen here. This little button right here, load your window layout, save your window layout. We made it to where it works on multiple monitors. Since I've got 8 screens, it saves in all 8 places. Can I trade currency on this platform? No, you cannot. We don't do currency data feeds yet. Pretty soon, we'll be able to, we're unlocking trading for futures first on the month scale. We actually can push that back 2 weeks. We usually set a month-ish. We keep adding 2 weeks to that because we're adding new things to the front of that project to handle that load and such. At 4 to 6 weeks, you'll be able to trade futures here. After that, we're going to go straight into options and stocks. So by the summer, we hope to be able to trade those 3 things, currencies and crypto, in the future at some point, for sure. 1 minute till market opens. I'm pretty excited. Let's pop open my walls. We have a DD right here, a DD monitor, just like we had resilience before, which is looking pretty great. So again, that irrational open, just something you just want to sit on. Hook you up. I mean, you could still use our platform for what it's designed to do. I mean, the platform is designed to give information. So most people will use it to analyze the markets. So if you do anything related to equities or stocks or futures or US commodities markets, we've got stuff for that. Oh, this is my training. Let me delete all of this. Those markets are rational, so I'm probably gonna make any trades this morning. I already know when I wake up that I'm not gonna have to do that. So when a new release comes out, everybody needs to log out and log back in. Just FYI. If you don't see that you're logged in, you log out and log back in. So log out in all instances. That will fix it. We have a patch going in to force kick you out, but that's not done yet. For sure. Okay. Yep. Just get a read on the market. Being irrational is one thing. We are on the bottom side of the redistribution zone. So this resilience number clearly being irrational below these doomsday bands. Let me see what I can get what they are really quick. So let's convert them to SPY, because really we don't have any, I'm not doing any trades today. So I'm going to just show you how I do this, and I'm going to do a quick conversion to SPY. Okay, this is the one. Let's just do a quickie here. Okay, the bot's going to run them, and these are just my 930 conversions. It's coming right out the door. 405.5, and let me just zoom out and get this on here real quick. Show you some window of opportunity stuff. 405.5. 411.41. Okay. So I already know when we have irrational markets, there's nothing really to do until we get inside the bands. We get inside the bands, I will trade small. Bot does have DD bands. It does. You have them published at 4:45 every evening. Just the conversion you can do yourself. We also have a conversion channel that will convert the levels. Some of the guys on the team volunteered to convert the levels for y'all. So inside the bands, I will only trade small. So today's a short against 4, 4.5. If there's anything bear short up, I bring the algorithm up, shows me where buyers and sellers are likely to be. Opening below monthly hedge, short against hedge, back to 0 with the small position because irrational is likely a trade I want to, because the R&R pretty good, 403, 4, 4.5. It's a 1 point short, 1.5 to 1 if I did do it. So when this approaches here, if this yellow line is below 0, I have a higher chance of that trade taking off. DD is perfectly 1/2, so we are seeing the bear zone today. So the highest high is right here at 407. So if resilience stays really nice and gross, there's a nice little scalp from here to here. Here to here. That's all I'm doing. Pretty simple. And I'll do it with like one really small position. All right. All right. All right. All right, a bunch of people sign up this weekend, so I'm trying to get. I was out of town for vacay. Hit that like button while you're here. I'm gonna get my drawing tool really quick. Oh, my tablet is turned off. Okay, so because irrational, resilience is going to likely not be ahead of the market. It's likely to be delayed. So if we get there and it's close to 0, I'm not going to touch it. If we get there and it's really far below 0, I'm going to touch it. So the resistance, basically, when rational, which we're not, res less than 0, has that as resistance right there. Number 2, DD less than 1/2. We have a DD chart now that will show you. It means that this is also resistance for another reason, this gray box right here. So there's resistance there and resistance there already out the door. Inside of this band, this is irrational. So it's not really a resistance, but there's going to be a high volume pivot right here. Oops. Resistance. So already I know the market's doing this or that or that. I'm going to figure which hand I want to play. So that's pretty simple to know that that is not a breakout, that a catalyst. We'll look at some things in a second there. And even when opening outside of these bands, number 1 is we open below the bands, right? It's irrational. So I pretty much don't trade, or I trade small. If you guys want to check out our program, we're doing this awesome thing. Our full algorithmic platform has 15 different indications to predict high volume pivots. Pick a stock. I'll show you how to do it. Put your favorite stock in chat. I'll run through it. If you so we don't use technical analysis or trend analysis anymore. We don't use multi-time frames. We use I use one chart with all the information in one spot, and I use a couple of tools to show me which way I want to lean the market. So this tool less than half, this gray box is where the resistance is today. Or this white line below 0, where this dashed line is, means this dashed line is also resistance. So that is pretty much the high. Another thing is bear short up. Shows that when rational, even though we're not, there's a trade setup I look at from here to there or right back to there to trade right against the open. This V-shaped scalp, that's it. Since we're on the bear side of the market with bear positional distribution in the stocks, short resilience, Nasdaq's looking worse than the S&P, that's very likely. It's very likely. So I'll add and I'll double down here to trade about there, and I'll stop right on the other side of that. If this res goes positive, then I'm going to lose the trade and cut it. So, 5 minutes in, I've already got my risk and reward 1.5 to 1 trade. Nice little short. I only short against monthly hedge from the bottom. It's the index, and that's it. You want to give me a stock? I'll show you how this works somewhere else. So that's how I do it. Okay, so let me show you something super cool. We have new scanner stuff. Woohoo! Okay. But anyways, our platform is $199 a month for all the features, but we're doing this really cool special for literally the first, well, I'm not going to tell you the secret. We're going to cut it off at some point, but we want to get a trial of people in here. We've had 700 people sign up in the last 2 weeks. It's been a madhouse. They're going viral. So check this out. We lowered our prices to $35 temporarily for 3 months. Literally nothing to lose. Okay. We're doing a 6-week training program. We merged with another group. We have this awesome course series. We've gone through week 1 already. Who here has gone through the course series at week 1? Tell me your honest opinion about it compared to anything else you've done learning trading. Let some of the newer folks know what we do here. Like it? Hate it? Is it just okay? Lukewarm? Are you still picking up fragments of your brain off the floor because it blew your mind? Let me know. Of course, it's a lot of info. You're actually going to learn something. That's a great thing. You have to rewatch the vids, absolutely. But the best part is that first week is that's the hardest one. From here, it gets easy. Small videos, short videos, lots of trade plan and execution videos, right? Once you know those fundamentals, that's all you need to know. At least for what we show you. Right? Patience. I'm just chilling, taking it easy. Nothing happened here. Okay, so back to my scanner settings. Let me show you some of the new features we have. Let's go ahead and, since we are in bear short up, let's go ahead and search for liquidity map for all the bear setups. Let's click bearish and put those there. Okay. Let's look for some break up trades just in case you want to find trades that are breaking out to the upside. Let's go MHP breakup to see if there's anything looking good. These are going to be monthly gamma squeezes. We are in a new trading month. Remember that. The third Friday is already come and gone, so we're in a brand new trading month. Okay, so this is going to be just monthly hedge pressure breakups. These are going to be, and we're going to do, with that, we're going to add an illiquidity pocket to it as well. And we can actually do a custom range, another type of scanner setting, which is brand new. We can now filter out, you know, junky stocks. Like I want price greater than 10 bucks, right? And we have this whole custom thing coming through that we're going to make. On the bottom side, let me go ahead and do a similar setup. So I'm searching for stocks that utilize their liquidity maps and illiquidity pocket, liquidity pocket techniques. So another thing is illiquidity pocket, MHP or hedge pressure breakdown. So we have MHP breakups just to find any bull squeezes. Let's look for just any hedge pressure break down. Let's find the down. Regular hedge breakdown. Let's go liquidity pocket. Let's remove that. 1 second. Okay, cool. All right, so we're looking for hedge structure breakdowns. Illiquidity pocket looks like we don't have any, so let's remove that. And let's look for monthly hedge structure breakdowns. We're gonna look for anything that is crashing or running. So these are my breakout scanners, both sides. And then here, let's go ahead and find some mean reversion setup. So this is looking for things if I want to sell options, the market's going nowhere. Nice and choppy, the bottom side of an irrational DD band. So really, I don't have any desire to do anything. If I'm that kind of trader, what I can do is sell into liquidity pockets. So sell calls above a bull zone on liquidity pockets. Let's remove all that. Looks like we don't have anything. All right. Everything's distinctively bearish today. Okay. But if I put that on there, just looking for balanced stocks. What's going on? Nothing, huh? That's okay. All right, back to the main screen. So I'm watching my scanner settings just for anything that's going to pop up and look good. Again, see, there's that resistance I'm talking about. Didn't take anything. Again, let's do this. I have what my liquidity pockets show. You can pop out the scanner just like I showed. All right. Yep. Okay. What did you guys say? Learn more about how the market works, why price is the way it does, from everything I've studied combined. Yeah, you see me not in a hurry to do anything or buy the dip or long, right? Just chilling. So you can see that right out the door, I'm drawing arrows. The market's probably going to do that. Pretty much on point with this. And I'm seeing why there's like 34 likes on the stream. I wonder if 160 something of you guys can scroll down, click that like button and check it out. If you go here, Amrath hears me smashing notes at the devs. We had a new release today. Trust me when I say, you do this for 3 months, you'll learn more about the market than you will in 10 years learning from everyone else out there. And then quit. Like, learn everything we teach, then quit. I don't have to stay. Looks like everybody's saying what they say. Been extremely eye-opening, learn much, feeling much confident, makes sense on why you have losing days. It's a lot, sounds really good, looking forward to putting it into action. And take your time, right? It's a 6-week program, not to teach you something for 6 weeks. It's to teach you something for about a week or two, and then teach you a million ways to apply it. It's like engineering school. Anybody here an engineer? I went to engineering school, and look at that. This is what I said was I was looking for. It never made it all the way there, so I didn't take the trade. But hey, look, nailed it, didn't do it, didn't lose money, didn't long, whatever. So in engineering school, right? So I'm a chemical engineer by my background. And what I learned in engineering school was like every year, every semester, you learn like one equation. You guys remember fluid? You remember your fluids class, your statics class? You guys remember Bernoulli's equation and the infinite ways you learn to apply it? You could solve any, it's like Bernoulli's equation is like the mathematical equivalent of duct tape and WD-40. It solves just about all your problems, right? Is really set to NQ on purpose? Oh, that was an accident. Thank you for letting me know. It was because I was trading NQ last week and I forgot that I took it off. Okay, that's bad. Okay. Charles, you bugging. What Charles saying? My DD bands are different. The DD bands should not be different. They are static. And there's a bot that prints them out. If you read what it said, this is what I'm saying, and I love you guys, but if you read what the bots say, does it tell you what's going on? When the DD band is a conversion, when you convert something from a static thing to a thing that tracks it, they will never be static. These things move in real time. These are just here as a reference. The real DD band is in futures. So if you look at the top left, don't skip steps. So I'll make sure I teach all you guys this. My top left of my screen here. The static band does not change. But since NASDAQ and QQQ are tracking each other, if I want a QQQ equivalent, NASDAQ and QQQ don't trade tick for tick. They deviate a little tiny bit. So if you have to put an equivalent, like if I want quote unquote DD bands, which is a futures thing for SPY, then when you look at the two, they're going to move around in real time. They're going to always be moving. Like you're going to have two green bands. They're going to be wiggling at all times. You're going to have to see where it is when you get there. Does that make sense? Kevin, because the two do not trade tick for tick, they deviate in real time. These bands do not stay the same. Whatever it says in that bot is only good for that exact millisecond of this universe. And then it's completely wrong a millisecond later. The static ones are static. Can we start there? We understand? It's if you go to the DD bands education section, it should tell you all of that. I think it should. How do you you don't recalculate them. They're the same. They are the same. They don't, they're this. Okay, let's start over. I love you guys. They don't move. These are where they are. In future, they are a futures thing. Stare at the futures chart and then you're done. Don't convert them to anything. If you need to convert them to SPY, just do like I do on the chart, which is what I said in the DD class if you were there, is that I just put them about where they are, and then when you're trading, you just move them around in real time. When we have them in the platform, it will move them around in real time for you. They're just estimates. Like, I'm not even looking at these. These are just there for a talking point. These are never going to be correct until they're automated. And when they're automated, they're going to tick in real time as S&P and ES stretch and skew from each other. Does that make sense? You guys got it? So you don't recalculate them. You can, but every time you recalculate them, they're obsolete. So if the S&P moves, if the fraction between the two is 10.01 and then it changes to 10.03, your bands might move 20 cents or 10 cents or 5 cents. So if you have a converted SPY version of something that's futures, you're going to see this. The equivalent is if I were to take monthly hedge pressure, that's 404.5, and convert it to an ES equivalent, right? If I wanted to convert these numbers to futures, do you all understand the same thing would happen? The hedge pressure would dance around in futures, but be static in ES. I mean, in the ETF. We all got it? I'm answering your question, so. Bob J is saying my screen don't look like that. Which screen are you talking about? I have zero control over your screen, so I'm curious to know what that comment means, but please let me know. Kevin, we got it, bro? We good? Somebody said, nice to learn something new, not just manage your risk, stick to your plan. Oh yeah, it's 302 where people are saying, people always say stuff like, man, I've been losing so much because I don't use risk management. And they read a book and it inspires them. And they go to a Tony Robbins seminar and inspires them. They're like, oh my gosh, I should use risk management. That's what I've been missing. Well, gee golly, I'm going to wake up tomorrow and use some risk management, right? People just say it like trade your plan, stick to your plan. No, people want to know what the plan is. How do you make a plan? And we're going to teach you. That's what we do here. So much to digest, lots to digest, but really good. Think you can start from how you set up this template first, please. Amarath, how I set up what template? When you guys are asking the streamer questions, I'll beg you to be very, very specific. Like my screen don't look like yours. I don't even know if I should start answering that or ask you to be a little more specific. Do you use Tradeovate? This is a trading platform. So if you like, our screens will all look different. So are you talking about which part of the platform or whatever? Please be specific. You didn't get Amaranth's question. What did Amaranth ask? Is your resilience set to NQ on purpose? I think I answered that one. Your head hurts for visiting engineering equations. So going forward, like engineering school, right? They teach you a couple of things, and it's how you apply it. Like we use Bernoulli's equation to solve, you know, how frictionless flow in a pipe. You can use it to solve certain kinds of, you know, air velocity problems around airplanes. You can use it to predict how long it takes the Titanic to sink or the big hole in the side of it. You can use a certain equation to do a lot of stuff. And that's kind of what this is. After the first week of grilling, if you haven't watched all week 1 videos, I urge you to watch week 1 videos and don't ask any questions until you get through all of them. Because once you get through all of them, it's an aha moment. And it's like, wait a minute. So week 2 is revisiting week 1, right? And then applying it. So the videos are going to get shorter and sweeter and quicker. Application. You're going to be so quick and good at this, I promise. Amaranth, ignore you. What was your question? Is your resilience set to NQ on purpose? That is your question. Never mind your last question. You see it's 4 detached windows. And then that's the thing. If you ask a question and I don't see it, just ask it again. Not, can you answer my question? Because I'm scrolling up looking for your question. Y'all gotta be specific, man. I can't see what you said. Fluid dynamics. Oh, it's so awesome. Blech. How do you pop out windows? Oh, easy as that. So in the scanner, what you do is if you click this button, it pops up an instance. So if you want, well, we ask if you guys can come right when we open the stream in the mornings. I usually give it demonstrations of all the new stuff. So if you miss the demonstration in a new release, just come later on in the day when we do our session. We'll do a little demo as well. But yeah, feel free to ask if you have any questions. Bernoulli's, baby. The DD indicator down at the bottom. This is just showing you DD in real time, how it changes. So it is 0.49, and you can see if let me just kind of close that out a little bit. Kind of give you some space. So there's a new release today, right? And so now we show DD as it updates in real time. Like if the market's collapsing and crashing, you'll be able to watch DD switch rapidly, right? So Jesse and Subsonic, have you guys taken the extended trial yet? You'll have to do it. Redistribution zone is one of my favorite scalping tricks. This is where I do most of my scalping. Yes, this acts as support and resistance under different conditions. Since this white line is well below 0, then we are not trading above this white dashed line. So like when I wake up in the morning, the first thing I said this morning was that this number right here tells me that that maximum is the high of the day without a catalyst. This is resistance. That number tells me that's resistance. Straight up. The top of that gray box. This number being below 0 tells you that this number, and they're made to be dashed to look exactly the same. This is resistance as well. So already the market is pushing from both places. A BRSU on the liquidity map is another thing. It exploits market maker positions and hedging. When I match those letters with these letters, it tells me from the open price, there's a resistance against yellow back to open. So an upside down V. And so that is what I drew. If you go back to the beginning of the stream, I drew exactly that. And while I did predict exactly that, missed it by a few ticks, we are irrational, and that's what happens. Right? Irrational market, you don't, I don't necessarily like to trade. And actually, this is right there. So already out the door. I'm not buying the dip. I'm not touching this. I'm not trading because it's outside of these bands. And when you go outside of these two bands, it's a really cool trick as well. Down here, market's irrational. I sit out. Like, I haven't lost a trading day since I started this challenge because I'm really not eager to chase everything that moves. I'm very picky. My win rate's about 81% right now on all the trades I've made. And we're going on what? This is day 19 or 18, something like that. 18. Bob, if you want the HP blue and MHP yellow you don't have in the gray area there. Okay, everybody log out. If you have things not displaying, we released a new version of the platform. You ever like open up Windows and it's like Windows needs to restart and it like forces you to restart? I'm forcing you to restart. So everybody close every instance of Rocket Scooter. If you had it open yesterday and we pushed a new release, your token's been expired, so you will not show connected or market open. So you need to log out of all instances and close it all down and then re-log back in. You should be fine. If resilience breaks below 0, on MHP becomes resistance, so there's one for the yellow line and one for the dashed white line. So you have two different tools right here. This and this have different functions. This is the tiebreaker when you are at yellow for the S&P. This is the tiebreaker when you are in the redistribution zone and at half cap. So you clearly can see that this is not below 0. So for the S&P to catch up to the stocks, if the stocks are leading the market, this kind of wants to be there, maybe, right? This being below 0 means that this wants to be there. So my guess is the market's going to do this, goof around, and by the end of the day, probably end up there. But the combination of these two things, this above 0, SPY above that. This below 0, SPY below that. So if I were to guess at the end of the day, there's a high probability we start there. Now, we've not covered the redistribution zone in the classes yet, but this is a cool way to trade the gap between open and close of something like SPY. And any index product that has a gap, these are gap scalping mechanisms. Really cool. Don't reboot, log out and log back in. If resilience, okay, so Matt, can you explain the DD and care below the resilience in the Pro app? So yeah, this just shows it changing. You see how it changed from 0.49 to 0.52? There's some market cap that's flipping from that side to that side. So that's all that means. Bob, can you show a picture of what you see in tech support? Again, I can't see your screen from where I'm sitting, so there's no way I can help you. We have a tech support channel in the Discord. If you can do that, our tech team will be right on it and help you out. Sorry, I can't help you, man. Anyone, if you say connected and market open, make sure that you have this zones button toggled on, that you didn't undo it, and make sure you have liquidity map on your chart. You can do that. Can you save settings on the scanner? Not yet. Future though. Love that idea. Well, I don't know. We have autos. Well, actually, hold on. We have auto layout saving on the charts, but I don't think it includes the scanner. It just saves auto layout on the charts. So I'll double check that. But the project to save your scanner settings with your window layout is something that I know on the project list we haven't gotten through yet. So I don't think it will save that. Great questions, you guys. So you see how today I didn't buy the dip. I didn't go in and try to short too much. I basically said what the market was likely going to do, and it did it, and I didn't do anything. Didn't take a loss and take a win. I waited for that monthly hedge tap to take a short, to short it back to where we opened, but I didn't do anything. You see that? No problem, Faust. I got you. You split any questions? What is redistribution zone? It's the distance between the open and close of anything that you're looking at. So the close price yesterday and the open price today. When you gap down or gap up, there's a massive share imbalance that market makers redistribute. Okay. So if you gap down and the market starts to trade up, it means yesterday there was a sell imbalance between yesterday's close and today's open. There's a net sell imbalance, which is why you gap down. And if you find buyers, well, the market makers tend to raise the offer and raise their bid price to look for sellers, right? So when you're looking for sellers, well, when the price closes and gaps down, it's probably because there's a lot of sellers there. So they're going to move the price to where the sellers were to test to see if they're still there. So redistribution zone is a predictable high volume pivot. Anytime you touch it, there's a predictable high volume. Each one of our calculations, what's different about us is we have 15 calculations that predict volume spikes. So as a trader, you want to trade where volume will be. And without using any technical analysis, any historic price action, I never change this from 1 minute. I have no technical overlay indicators that look at price. All we do is predict volume at different areas, and then I use tiebreakers to help me pivot the volume. And it's just like that. No more 10,000 indicators, no more blinking neon lights, noises that make your charts and platform sound like you're playing Galaga in the 80s. Just literally bounce, 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 and I'm going to use tiebreakers. So we try to just make trading and risk management a lot simpler. Our company was started by a handful of engineers who were unhappy with technical analysis because, mathematically, it's a mathematical failure. It does not work. It's never worked, and it's never worked for you. And if you're ready for a change from that, we're going to teach you a different layer of the market. So what we do is we assume that you can't predict market direction. That's our starting point. You can't. And those rinky-dink averages you use pretend that they can, and they never do. And you've lost so much money using them. So MACDs, those are the worst. Other things like this stuff, even 10 times more worse. Like things like this will never predict market direction. All they'll do is make your guru rich who peddles this junk. So what we do, and it's repeatable because I can show you live on any stock you want me to look at, is actually assume that you can't predict market direction, but you can predict where volume will be very easily. And nobody's done that, and that's what we set out to do, to predict where volume pivots are before they happen. So if I know if I'm trading, my decision is made at a volume pivot. Doesn't matter where we get there, how we get there. I know volume's going to be here. When it gets there, I got to decide bull or bear. I use tools like this, and like this to tilt my decision bull or bear. And so I analyze the market in a very simple way. This, again, to repeat, DD is an arbitrage type thing that shows the relationship of how much market cap is in a bull zone or bear zone. So if you throw a ticker up here, I'll run one for you guys. So I'm going to show you something. Give me about a 2-minute break, but everyone type in like your favorite stock tickers, and I'll kind of show you some cool features what the platform does. So as an overlay to what you do, like if I say technical analysis fails by design, I mean, all kind of analysis fails by design because, or price analysis, because you can't predict the stock market. And if anybody could, they'd create something that would never lose, and they would always use it and not sell it to you. So this is a layer of risk management. This is not predicting the stock market. If I automate risk management, it just has me sit out all day long. And I can automate that in 100% win rate by never losing a trade and never making a trade with 100% risk management. So the idea is that on the layer of what you do, Doesn't matter if you're moving average, just cross over. If you're like in an arbitrary spot, like right here, this isn't a decision point for me. There's decaying volume. I know that nobody's trading right here, but I know people are going to trade here, here, and here. And if you break out to here, it's going to be really violent. It's going to have a hard time breaking yellow and a hard time breaking blue. I already can somewhat see the direction before the market even opens. The very first moment the market opens, I'm already drawing out what's going to go on for the day. And if you rewind to the beginning of the stream, you'll see that I make my best guess with the information, and I happen to be exactly right on that predictable portion, minus it didn't exactly touch there, so I didn't get the trade. But in irrational markets, you don't get the trade sometimes. So I didn't do anything. Didn't buy the dip, didn't short, not shorting here. And that's the whole point of risk management. I trim my position to 0 and not make one because I didn't get the pivot I want. And so I'm using that kind of analysis to layer on top of whatever it is that you could be doing, right? Do you need something to isolate? You might use a volume profile, right? Or VWAP to try to locate volume pivots. They're looking at yesterday's volume, right? To try to forecast future volume. We're looking at future volume that hasn't happened yet because options, when exercised, produce trades in the equities that they represent. So if you have a SPY call that's in the money that expires on Friday right now, then that SPY has 100 shares of potential long risk by Friday. So we assume that there will be volume due to the exercising of that option, right? So the idea is that we predict volume that hasn't happened yet. We don't use yesterday's volume to try to pivot today. We look at future volume potential to find high volume pivots before they happen. So we're looking at tomorrow's volume profile a day ahead. Like everyone tomorrow is going to be trading high volume node that we predicted today at 9:30 in the morning. So the idea is we're one step ahead of unusual volume programs. We're one step ahead of technical indications, so I can know where high volume can be before it happens. And each one of these things exploits something cool and mechanical, which is what made our platform have its purpose. Okay, I'll be back in like 2 minutes. So, you know, as you guys know, hold on. So as you guys know, I've been also training, you guys might know Nicole. I kind of am also training her on rocket scooter stuff. She just wants to learn because she's trying to learn new stuff. And she walked in to say bye. She's leaving, and she looked at it, and I go, "What kind of day is this?" She goes, "Oh, it's irrational." Look at that. Already knows. She's like, "What are you going to do with your day off?" Even she knows. See, even she knows. She's like, oh, irrational day. What do you give 3 alpha? I'm like, I don't know, maybe I'll clean the house. But do you see how today the market, you know, I'm not buying any of these dips. So that's the whole point of using risk management as a layer to my analysis, right? So anybody that's new here, y'all see how this works? Okay, see, I'll type in some tickers. Etsy. Okay, cool. So when I look at anything, right, my first analysis point is always making sure markets are rational. We have 5 rules, and we're about to have them as, hold on one second. We're about to have them as indications on the chart as well, like when those rules flag. Okay, so the first thing I do is we have our film series for the first week of training. We went over and covered all 5 of the irrational rules. And what they do is we train you on this. It's not just teaching you this, but we had so many people come through the program, and how do you feel, first and foremost, everyone that's come through the program, about at least on a scale like 0 to 100%? I know it's the first week, so you don't expect to be masters at it, but how do you feel about the whole process? The first thing you do is you just check to see if the market's even tradable, right? Those indications, you wake up and say irrational, I'm gonna sell. Like, I'm 100% confident I'm not gonna touch it today, right? If I do, it's really small. But that process, like, are you grasping it? Because after the end of this week, you will be an expert at irrational detection, right? Let me know how y'all feel about it. As far as like a confidence, because we're gauging, we just launched a 6-week program to pace how long it takes for those principles to kind of settle in, right? So this is our first go. That's why we lowered our price from $199 to $35 to give everybody 3 months to try it out, to see how long it takes kind of people in bulk to really catch that process, right? Just missing DD Bands, the app, and it's all good. Amarath, that's not coming for months in the app. So you gotta make do somehow. Our process, we have to get futures data to calculate and convert them for you real time. And that's a month to get the data, a month to make another indicator. So yeah, that's the only thing we can't turn on. I wish I could. Trust me, I wish I could. Be a whole suite. Like, I wake up 5 minutes extra early just to estimate where those DD bands are in SPY. And I just have a gauge, right? But I don't really ever use it on the conversion because I just keep static ones off to the side. I just watch this all day long. And I don't know why that's on 5 minutes, it's usually on 1 minute. I just leave a 4x4 grid, and we teach this to the team here, is just to watch it in futures. So in reality, the reason to put it on SPY is to have everything in one location. Now, the SPY ones will dance around, obviously. It's only going to matter when you get there, if you're below it, because it needs to match the pivot in futures. And futures and equities products will expand and contract, like how far away they are from each other, right? So, okay. So Etsy, right? Pretending things are rational and there's a way to rationalize the market. The first thing I do is I look at this DD number and say the majority of stocks, well, it's kind of right close to 50. It's kind of balanced. So half of the market cap is bear zone, half of the market cap is bull zone. If this was overwhelmingly bullish, like a 7 or an 8 or a 9, I'd be more inclined to trade upward than downward if there's two options. So just keep that in mind. We'll get to that in a second. The first thing I ever look at is liquidity map on a stock. Once I make sure markets are rational, I will pull up the liquidity map, which is something we give you. This neat little drawing is probably the most comprehensive thing you can find in trading because it's so compact with information. There's so much information here and you didn't even know it. This is telling you where real bull and real bear positions are in institutional level, like large positions. It's telling you where market maker delta and gamma hedging takes place for monthly options and weekly options. So the combination of all three of those are like a pressure balance for you engineers out there. And so bulls are going to long at a certain point in the future. Bears are going to short at a certain point in the future because this is based on options. Or bulls are long now and bears are long now against a market maker. Both of those have the same risk. So we now know where bulls and bears are and where market makers are delta hedging long or short for different reasons. When you pin them all together, you just get like this pressure balance. If I just draw the pressures by themselves, bull, bear, delta hedging pushes both ways, right? And then delta hedging pushes both ways. So now you have, pivoting areas that matter, barring the redistribution zone. Let's forget about another exploit, which is that gap part. So right here, if you do just this, right? Well, let me stretch it a little bit more. Ugh. You can see that I've isolated the day into points of interest. And look, there's the pivot with the high volume, and there's the pivot with the high volume. So each one of these is a predictable high volume pivot before the day starts. You calculate the beginning of the day, and it shows you where they are. So when I look at this, we can't predict the stock market, right? But I'm going to analyze based on what I see. And this is telling me these letter codes will tell me what I'm looking for down here. So this is telling me that I'm in the bear side of the market. Check. Bear zone, the BR. Short up is a relationship between these blue and these yellow lines and price. So just forget about what those mean. These letters match here. If I'm looking for buyers, the only place I expect them to be on this indication, forget any of the other ones, is from yellow to blue. If there are buyers and they're not at yellow, I have no evidence they'll be anywhere else. So if it doesn't hold yellow, there is no evidence of any buyers anywhere else. So great, there's a risk management point. If I were the bull, which again, formulate your bias with a number of reasons, we'll teach you how to do that. But if I'm the bull case, then I only have one option, which is to long from there. And where do I get out? Well, there's a couple of places. Using this tool, I can see that if I'm looking for sellers, there's likely going to be sellers here. So now I know if I'm a bull, I'll trade to where I find sellers and then get out. And I can say, well, that's 2.5 point run. We put a 1 point stop, 2.51 trade. Now, if I were a bear, the opposite's true. Again, you wake up and formulate your bear bias or bull bias based on other things, but pretend that I take the bear case. If I'm a bear, I'm looking for sellers. So either A, we open below this and bounce off and come back down, which is what SPY did today. Etsy did not open below here, did it? Yes, it did. Well, I don't know. Maybe not. Let me see where Etsy opened at. Okay. So Etsy did open right there. Okay. So if Etsy opened there, then I also have another option that I can do that short from yellow back to where we opened. So short from yellow back to where we opened is one option. Second option is the short from blue back to yellow. So if I were to draw both of those things, I have a short option there and a trade just like that. So I would take both of them. I would short here just in case it gets that scalp. I can choose to either stop here or add to it there to take that trade. So say I shorted 10 shares, and then when I got there, I shorted like 70 more, like a bigger lot. My cost base is right up there, and right when we hit that pivot, I closed out. Just an example. So bulls would have an idea. They can trade from here to here, and look at that. Your bull leg was there. Bears can trade from here to here. Your bear leg was there. So that's day trading, right? So say I wanted to swing trade. or even sell options, right? Let's talk about bias. Right now, not only are we irrational, but we're right at the middle, right? 0.5 is the balance point. So it's not even that bearish or that bullish, just literally just slightly bullish. This is all stocks in the market together. This is the entire stock market. Slightly bullish today, even though we're trading down. So you're going to see that that bull leg might have been an option. If this is 0.2, 0.1, I'm not taking the bull leg. Since it's right at the middle, I might be inclined to take either leg and scalp both sides, right? We haven't done the video yet for half gap and redistribution zone. We need to solidify irrational, rational, and liquidity map before we start talking other techniques like scalping. It's a highly specific thing that only certain traders would trade in that redistribution zone. And the window of opportunity is what we're going to master this week. We're going to be masters of window of opportunity. Okay, so just an example, right? So that I can take that bull leg to there, that bear leg to there, but I know I'm not trading anywhere up in here because it's illiquid. There's no proof of buyers or sellers in abundance, so I wouldn't trade up here. So riddle me this, right? It's not that bullish, not that bearish. So chances are it's likely not going to rally and go super bullish, right? Because the rest of the market's just kind of balanced and flat. Number two is I've got resistance here, and you can see resistance there. So what if I sold a call and bought a call, and I sold a 0-day, or I bought a 0-day vertical credit spread? Actually, this would be a credit spread, or I can engage in a vertical debit spread. If I just flip them around, this is likely a debit. 1-to-1. Right, however you want to do it. I could sell options to bet that we don't go here because, well, it does not easy path to go. That's not super bullish. I can double down on seeing that redistribution zone. The resilience pivots is also negative, so stock's gonna have a hard time breaking out and going. So this is pushing from here. This is not super bullish, and this is likely the high of the day. So now selling options, I can sell calls up in here with a higher probability, like that. You see that, or an iron condor, either way, right? See, I'll see how now, as you're understanding the fundamentals, as Ezra, some of you have been through the classes now. Like if Ash and I just started teaching you how to look at this and sell condors or, you know, sell spreads, it'd be like, okay, but now it's like you're getting it, right? Instead of me trying to think of the style of an options trade, like a complex options trade, even a synthetic options trade, I can see how options work in a very simple sense of where's price likely not going to go. To the bull zone. It's very unlikely to go there today without a catalyst. You need resilience to be positive for me to have evidence that we break the redistribution zone. You need a hedge pressure break, which is already a low probability. You need a pass-through liquidity pocket, which is already random from there. You have all these obstacles to get to here, and that's not even that strong, right? So I wake up today and say, you know, I would like to sell options inside of here. I could sell calls all through here. And the likelihood of breaking through multiple resistances when things just don't look good, right? So those of you in first week of class, this would be kind of what weeks 3 and 4 are like, right? You're staring at this and you're just seeing options at the core. You're not thinking about options spread. You're not thinking, is this a debit spread? Is this a credit spread? You're just seeing it at the core before you define the style of trade. It's more of where I want price to go and where I want price to not go. Is this a go day? Is it an illiquid day? Then price is going. I need to capture delta. If it's a no-go day, then I need to capture theta. Right? Premium's quite low there. Right. So the idea is that's something you can decide to not trade something if the premium's not worth it. So if the opportunity is there and the premium is there, you can trade it. Right? If the premium is quite low, then you can day trade a short there and buy a low premium call right there to fix a stop loss, to hedge your loss. You can sell covered calls against stocks that you own. Right now, an example is we're at hedge pressure. Say that I own Etsy stock and I'm going to sell calls to make money. Well, I could be even tighter. I can sell on hedge pressure break, which is also unlikely. But if I own Etsy, then shit, I want that to happen, right? And without a lot of evidence and no catalyst today, the chances of that happening are small. So yes, the safer you are, the cheaper the premium is going to be on the sell side, right? You're going to have a horrible time, right? Very illiquid, very out of the money. Premiums are low. But the probabilities you can, if I were to sell options today, you can also do that. Remember, when we get to the options class, we're going to teach you. You can also do that. If the unlikely event happens and it breaks from here and hits there, I'd immediately close out that leg. Once that delta is half. Make that profit, lose that profit, and then close it out. You can trade spreads here. Oops. Just like that. That's a good setup. You can, if you're further out in time where premiums are more expensive, you can use monthly map to do the same thing for Friday options going out. So you can actually plot what the risk will look like a week out. So the idea is that I will bet that the market stays bearish. So if I want to be on the put side of things, you can go the other way around. You want to trade near the money. Right when you hit this bottom, you can long a call for that strike or lower. So when it goes up, that call goes in the money, you dump it. If there's a wide enough distance for you to travel and trade. There's all millions of ways that we're going to teach you guys all styles of trading. Okay, y'all take some more tickers. Let's do MSTR. Okay. Not enough information. I'm going to skip it and move on. Quick as that. AMD. Bear short up. AMD and Etsy are exactly the same. The same exact setup, right? I can short from here, from there back to open. I can choose to stop and maybe double down from here to here. I can do both options. Similar setup. Looks exactly the same. Remember, I can have a call right here. I can sell a call to bet that we don't break through hedge pressure. Buy dirt cheap calls at the top of the bear zone because if you break through hedge pressure, that's the next step. You can sell iron condors if you think you're sandwiched or doing certain things right there. You can do all kind of ways to trade this. All kind of ways. So love you guys. Okay. So nothing today. ES futures, there's no trade. Which is why I didn't make any trade. So you guys are watching my small account challenge. If you guys don't know, again, I'm going to train you on how I trade futures, right? I do these challenges all the time. They're really fun, and we love to share with you guys how I trade. It's transparent, so I show the net look of the account. I'm trading a 10K account to 100K. When markets are dangerous and selling off, irrationally set out. So today there's no trade. Immediately out the door. The only trade was the bear short up from here back to open, this V-shaped move. That's the only one I found. And since we never got there, I never grabbed the trade. I wanted to go from here to there. It pivoted before that. Now the day is over. We're probably going to sell off. And I have no evidence to do anything from here. Somebody who asked. You guys got it? Matthew? Hepcat Tesla? Okay. This is a little bit different. BSU. Again, let's bring this guy up here. We're hovering at hedge pressure on Tesla. We opened slightly below hedge pressure. So we opened right here. So on Tesla, any breakthrough goes to next resistance, and breakthrough went to next resistance. And that's the only scalp on Tesla today. That's it. There's a dips scenario where if I were looking for buyers at monthly hedge, I would take it, but monthly hedge is way down in the bear zone. So I wouldn't long in the bear zone if we fell there. So the scalp from there to there, off liquidity map, and I might have done on Tesla. Any more? SI. Okay. Liquidity pocket. Everybody's been through the classes, right? What happens in a liquidity pocket? Tell me about SI right now. from first class. It's random. So do you see how comfortable I am, right? I woke up this morning. Yeah, you guys nailed it. Amarath nailed it. Hey, was that you that made that drawing, Amarath, by the way? The one I've been using. Dude, can you make me more drawings? Because they're so much better than the ones I make, and they're beautiful. That drawing is great. If any of the classes you go through and you're like, I kind of want to make an infographic to replace Matt's chicken scratch, I'd love you to death. Please do. That's an amazing study material. Okay. So right, I wake up today, market's irrational. I'm like, market's gonna trade down. There's no evidence it's gonna trade up. I'm not buying the dip. I'm saying I'm gonna sit out. I didn't take any risk. We've trickled down. Like I said, there's an art form to just inching my account along to not take a loss. Now, if you remember, it's, again, my results don't indicate anyone else's results. You have to understand, you know, I've been doing this for a while. So, but I do put my money where my mouth is, the account number and the balance on the screen. That's something that is so rare. I'd like to find another person like me so I can watch them. But it does take a certain amount of confidence to be like that transparent. Most people aren't, and I don't blame them. But I'm as in your face about it as humanly possible. With the exception of my accountant being live on screen doing my taxes in front of your face, I don't think you get more transparent than this. So the idea is we want to show you everything I do and every decision I make and why. I woke up, literally my tweet today was irrational day again. Like, you know, it's right before the market opens, an hour ago, irrational day, easy peasy, gonna sit down, let's let the market do choppy things. That's it. And then there's Amarath's awesome graphic. We talk about liquidity pockets. So I'm just chilling, right? And everybody's like, what's your trade? It may not seem ultra sexy, but let me tell you, I went on a 70-day streak the first time I did this on YouTube. 70. Imagine in the middle of month 3, when people are showing up just to watch you lose. They didn't even like you. They're like, I'm here to watch you lose. You suck. Blah, blah, blah. Oh, this guy sucks. You terrible. And I'm like, I know, I'm horrible, but watch, like, just, you can watch everything. But I went on a 70. I'm so picky when I trade, maintaining 70-something% win rate over. And then that challenge, we went for like 9 months and I pivoted to build rocket scooters. So now we're back doing the same thing. And I'm using the platform, being ultra careful, picky when I want. Up 40%, I think. I think exactly 40%. It looks like it's right at 14 from a 10K start. And no red days yet. It doesn't mean I have this magic crystal ball. It just means I'm kind of like at peak of my game. I'm just doing pretty good. I'm getting lucky on top of it, but I'm doing okay. I'm not doing terrible, but it's risk management. The risk management's the key. You may think you're missing out on something. Market's trading down. What's the next opportunity? Like my buddy says, a wolf who chases 2 rabbits catches none. Right? So I need to put watermarks on those. Confucius says, or my version of that is a hungry wolf chasing every squirrel it sees will overlook the wounded pig nearby. So it means you save yourself for that trade that makes sense, and you don't try to wibble your account away by taking everything. As a matter of fact, when you day trade for a living like I do, you're not addicted to it like it's a game anymore, like it's a gamble. It's a job, and when you get a day off, Nothing's better than getting a day off of work and you can go, ooh, day off. Ooh, I'm gonna hang up those curtains today. I've been trying to do all month. Put some music on, make some coffee, relax and chill. Struggle with the market. Let the newbies do that today. And I'm telling you, there's a whole mechanic behind sitting out. It's an art form. And hopefully through the program, we can instill some of these principles to you. It doesn't mean avoid the market every day. It just means you it's science to not overtrading. To me, it's a science, not overtrading. There's some math that I'm using to keep me from overtrading. And that's it. Most people's big date. Brian, you know I'm gonna be day drinking. And I don't know why you're not here having a beer with me. How would you treat gaps within the put wall today, SPY? How would I treat gaps? Well, let's see if the team knows. First of all, I'm treating it like nothing. It's a sit out day for me. So in a practical sense, pretending it's not a sit out day, right? How would I treat gaps? So he's talking about here to here within the put wall. Okay. SPY put 400, 402 and 3. You're talking about you treat as large. Yeah, you treat every. So, oh, you're talking about this. Okay, these. The important part of walls, and when we get to the application part of each of the widgets as well, like this week is going to be training on the platform and training on liquidity map. We're going to cover all of that. So what is that and what is that? It's part of the zone. So what's important is the breaks. Breaks of illiquidity in liquidity pockets, right? So great question. You treat it like it's part of it. It's continuous. Good question. He's saying, why is there no gap here and no gap here, even though there's gaps there? We treat them like blocks. So there's a block of bear risk and a block of bull risk. It's easier on the eyes, and there is no actionability at walls anyways, unless it's an opposing wall. So if I'm trading bull, 413 is my resistance, right? If the market's falling, you treat this no different than that. These are all treated the same. Good question. Does that answer your question? Oh, nothing's changing. Res is still negative. Market's gonna love staying below the open. Monthly res is starting to pull back. So as you see, stocks themselves are starting to become. Oh, oops! I dragged my resilience up here. Stocks themselves are starting to battle those monthly hedge breaks. We are starting a brand new month today in the options month below monthly hedge. Not a good sign. This is fighting to stay alive, but again, an irrational market. If I were to take a guess, the highest high of the SPY is about right here today. The highest high. Resilience is going to push half gap really hard. Monthly hedge is trying to support the market as well. This wants to be here while simultaneously being pushed below there. So it's like weird conflicts, right? Just spells out volatility. So if you see mode 2 resilience, which we'll cover today, means this is resistance, okay? Inside the band, that becomes resistance. Outside the band, this is going to be a hard resistance to break. As you see, there's the high volume from that. This guy being above 0 means that this is going to likely want to reset as much as it can to be here. Now, the tiebreaker, the white number always wins when you have to compare the two. So the white number is my trading decision, even though the forces are kind of pushing against each other. This wants to push down, that wants to push up, because this is above 0, that's below 0. At the same time, that being below 0, that wants to push back down while inside the band. We call this mode 1. Mode 1 is inside of the zone. Mode 2 is outside. So right now, mode 2 is saying this is resistance. If we break through here, if you break through here, it wants to go there. So it's like an if-then. Right now, it's wanting to push this way. But if something happens and we break through here, it's likely wanting to balance there. So the balancing act, right? So either case, I can make a case that, you know, we're bounded in this range today, predictably, right? It's a nice, tiny little range, 30 points up. We're rational, right? It's not a breakout day, not a crash day. The idea that that's right at the middle and that this is right at 0 is going to prevent this from collapsing. That's why I'm not chasing a short. If this goes well below 0, then, you know, the market's going to have a hard time staying afloat. If this starts going below 50, that's going to have a hard time as well. All right. Any more questions y'all have? I know small sit out day, didn't take a trade, kind of called the day, but didn't do it. I know. But what you all to do is come to the extended trial. It's 3 months, 35 a month. This is a one-time only thing. I don't know how long we're going to have this open, maybe a couple months. And if you get in, you can learn everything we have and literally quit and take all this information with you. And teach you how to wake up, make a trade plan, how to trade with different kinds of rules, whatever you want to do. We'll teach you everything you want to know. Normally $199 a month, $35, because we want people to try it for a long time and commit to the process. No skipping steps. We're going to grind and grind and grind and learn all of this. Like I said, strategic sit out day. It's a bear market. There's a lot of those, but hey, market's trading down and my account's going up. I cannot complain at all. Am I missing out on something by not trading? Say absolutely not. I'm 40% up the account. Right now, I'm missing out on that mimosa that's waiting for me upstairs because I'm just going to take the day off and cut easy. You know what I mean? Do things I need to do. And the opportunity's there. I'm going to take it. We're going to teach you how to read the market. Again, try the extended trial. The link is down. Go below. Check out that link. It's overwhelming how many people sign up just to check it out. And at least we'll give you some foundations of risk management. You can run off, do anything you want out there in the market, but at least you'll know that you never had risk management rules before. We have some. You can check them out. Give it a try. Class starts in an hour and 15 minutes. They're going to get shorter and shorter and shorter, and you're going to love how it goes from here. That first week grilled you. Week 2 is going to be a cinch. Y'all are going to love it. Okay. Love you guys.